I think I did this right. I think we're set up. 8:58. We'll get started in a couple of minutes. Let's do a reality check here to make sure you could see a screen and that you could hear my voice. I'm going to type in a good morning. Robert, thanks. You are the first to chime in. Chris says I'm real. I'm trying to keep it real, Chris. Thanks for that. Good morning, all. Awesome. All right, sweet. Glad I did that right. We're going to get started right on time here. We have another minute or so. Actually, broadcasting from the downtown NinjaTrader office. I'm a little bit off to the side in the office right now. In the public, I'm in the general population right now. I'm mingling with the general population, which is always a good thing because everybody here is, in my humble opinion, super smart, super cool. And I always pick up a few things every single day just by like walking around. Lucky to be here, glad to be here. Hope everybody's well today. Middle of the week, Wednesday. It's already July 21st. Summer is flying by. Hopefully it's all good wherever you're at. And Sherry, I will be, my life is an open book, Sherry. If Sherry says, hope you got the vaccine, I did. Absolutely. I did do that. I understand everybody's opinions on this thing and I'm staying out of it, but me personally, I did. Any other personal questions, feel free to reach out and just ask me. I'm pretty boring actually in real life, just so you know. Chris says it's just hot. All right, very, very cool. 9 o'clock, let's get started here. My name is Jim Cagnina with NinjaTrader. Welcome to today's Wednesday broadcast. We do this every week, and I do want to remind everybody before we start trading futures, options on futures involve substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that can be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now that third part's a little tongue-in-cheek, but not really, because stress in life matters. You want to be in a good place. When we're under stress, we make bad decisions. So be comfortable, be in a good place, easy with the day trade margins. Yes, NinjaTrader offers flexible and low day trade margins. Leverage is a double-edged sword. So be careful with that. If you're not sure where you fit on the risk capital curve of things, or you just want to talk about, things like leverage and contract sizes and stuff like that, feel free to reach out to me directly or any of the customer service reps here at NinjaTrader. Everybody here is pretty heavy, trained in a pretty serious way. So there's a lot of skill and there's a lot of experience here. All right. Any questions on risk? Let me know. I'm in simulated live mode today. These are not real trades. These are simulated live modes. If we do decide to take one, we're going to focus a little. I don't know. We're going to focus on probably the micro E-mini S&Ps, maybe a couple other contracts. Things are kind of slow today, and just kind of want to dissect what I'm thinking, what I'm looking at as we go through this discovery process of what we should be doing when we're trading futures. All right. Any questions, just feel free to pop them in real time. I will grab them as fast as I can. And I'll type in contact information for me later on if anybody wants to reach out directly to me. So right now we're looking at the micro E-mini S&P futures market. And as most of you know, this is really the same market as the classic E-mini S&P, except it's all based on the S&P 500 stock index, and it's this particular market is 1/10 the size. So it's a smaller size contract, which has a lot of benefits for a lot of traders, enables you maybe to be more capital efficient when you fund your account, enables you to scale into positions, scale out of the positions a little bit more easy. And we're going to talk about some of those details as we go. Just one last sound check. Everybody can hear me okay? Let's get that thing going. Okay, cool. All right. So first thing I do, the second thing I do, the second thing I do is what's my bias, right? So what's my bias for whatever market I'm looking for? Am I overall, my long-term bias, am I overall bullish, or am I overall bearish? And that's kind of the first thing I want to look at. So I'll look at like a daily chart or a weekly chart or a monthly chart, and sometimes all of those things. And, just to kind of get a sense for direction. support and resistance, and what's happening here. So I have a daily chart here for the MES. That's the ticker symbol here. Let me kind of move this a little bit so you can see it better. And I've drawn a couple lines on here. I have a couple things on here, and the only really there's only three different types of analysis that I have here. I have the RSI, right, which is an oscillator, which we've been focusing on the last week or so, maybe last 2 weeks. This is the oscillator that we're kind of experimenting with, and we're looking at it, and we'll talk more about that when we get to a 10-minute chart. And I have a Fibonacci retracement. And I drew it from the recent high to the recent low, right? I did recent high to the recent low, and I kind of eyeballed it. It's not exactly perfect, but it's close. And then I have a volume profile. And what I did with the volume profile, I used the order flow tools on NinjaTrader, and I just selected the area between the recent high and where we're at right now to give me a flavor for how much volume is where. Right? Where's most of the volume that's happened over the last week since we've had this kind of pullback, right? We had a pullback down here, and then this is a retracement, right? We're retracing back up to be consistent with the trend. My trend is bullish right now. So it has been since 2008. I mean, it's ever since the mortgage crisis, when the Fed started intervening with low interest rates and QEs and liquidity programs and all of that stuff. We've seen it. You could chart that from 2008, 2009, boom, really from 2009 going all the way up. And there's been some price dislocations along the way, and that's the nature of the market, right? So, we saw this breakdown here. And again, this is, in my opinion, this was based on, the COVID concern that this is going to kind of resurge again. And that kind of causes this kind of dip, I guess you would call it. And some folks are like, don't buy the dip. But, in my opinion, right now, we're retracing nicely. We've closed above the 50% retracement on this little move. Now we're trading well above the 61.8% retracement. So I'm in bull mode today, right now. This rectangle here, the yellow or red, I don't know, what do you call it? The red rectangle. And I just kind of highlighted an area of what I'm calling resistance right now. Relatively far away from where we're at, about 45 handles or 45 points from where we're at in this particular market. So there's a long way to go on the upside. And there's also a lot of room down here on the downside. But today I'm thinking about places to buy right now. And until I see a 10-minute chart, I don't know. I don't have validation yet, but we'll get validation in a second. The first thing I do, that was the second thing I do. The first thing I do is look at the economic releases, the planned news, right? So we have planned news and we have non-planned news. A lot of the indicators, a lot of the benchmarks, I guess I'd call them, for regular types of news that comes out. Is published on various websites. I do it on my Twitter feed, Infinity Futures Twitter feed. You'll see what numbers are coming out today. And, today was the MBA, mortgage application. It's numbers. It's a weekly publication. I'll go ahead and cut and paste this, the link to the report that was today into the chat box. And, this thing kind of varies a lot at week to week. So you got to kind of think of the trend, look at the trend as you go. Mortgage applications decreased 4% from 1 week earlier. And again, this is an estimate. This is a survey that these guys do. But it kind of gives us a flavor for what's going on in the US, right? So, our interest rate's still a factor right now. Our people, this crazy kind of migration from some of the bigger cities and some construction phenomenon that's happening in various places. Nashville comes to mind, in Tennessee and places like this. Give us a flavor for what's going on in the housing market, which really is an indicator of what's going on in the economy, I think, in my personal opinion. So I keep track of that. I look at that, and I just thought I'd post that up here. The only other thing of significance that I could find is the EIA Petroleum Status Report, which is coming out at 9:30 Chicago time, and that really drives the crude oil market. You'll see that it's a weekly number, but what OPEC's doing. There's an API number that came out last night, but this is a really good a really good number to track if you're trading crude oil, and it does affect natural gas and some of the other energy markets. And then lastly, before we get to a 10-minute chart, I want to talk about the FOMC meeting. Here's the remaining schedule. This is the Federal Open Market Committee meeting of the Federal Reserve Board that sets pretty much policy and publishes policy with respect to what the target Fed funds rate is, how much liquidity is being pumped into the market. Is there going to be any tapering from asset purchases that have occurred over the last few years? Antonio, we have sound. Sorry if you're having trouble. We have sound. Apologize for that. In any event, July 27th, right? So, next week. And sometimes in anticipation of these FOMC meetings, things kind of slow down, right? Things kind of slow down in anticipation of what's the answer going to be next Wednesday. Remember, they start Tuesday, and I think the answer, the report, the press conference, and all that stuff happens on Wednesday. And then we have September, November, December. So we have 4 more for the rest of the year. Super important, in my opinion, when you're looking at the stock index futures and you're looking at U.S. Forex futures markets, right? The currency markets and futures, and also in Treasury bonds. Treasury bonds tends to have a mind of their own, but and I think that sometimes that's a leading market. So that's kind of that. And we'll go into the rest of my notes later. Any questions on it? Type them in. Geraldo, how are you? Good morning. Thanks for being here. All right, so I'm going to go ahead and get rid of this. Again, bull market right now. It's the only takeaway I have right now, other than a lot of room on the upside and a lot of room on the downside. RSA is right at 50 here on a daily, so we're going to just go ahead and lower that. Let's get to the magical, or maybe not so magical, 10-minute chart, the infamous 10-minute chart. So here I have a 10-minute chart, and this is a time frame I'm looking at right now, right? I'm looking for a trade opportunity that's going to last, maybe the next hour or so. And I'm going to kind of go ahead, walk through my process. Candlestick chart, simple, basic candlestick chart. I do have a moving average cross, and the fast segment of that cross has crossed up dramatically, which corresponds with this relative appreciation here in price on this candle right here. So that's not surprising, right? That's not surprising. And just to see my settings, I'm just going to go ahead and right click on the chart. Everything is kind of like in NinjaTrader, it's pretty easy. You right click on things, and things pop up, and you could customize your experience, and it's really not that hard. It's really pretty easy. And so, my fast moving average is 6 period. My slow moving average is 26 period. And the reason why I use the words fast and slow is the fast moving average, every 10-minute bar is going to change the moving average faster, because there's only 6 sets of data we're looking back at to calculate the moving average, versus maybe a longer term, like a 26-minute, which calculates 26 previous bars to come up with what that moving average is. And as a result, because it's more diluted, right? There's more data over 26 periods than there is over 6. So it's going to react slower than the fast one. That's all it is. And we're looking for crosses so we could see changes in momentums, and we're looking for divergence and convergence and things like that. RSI settings are standard RSI settings. 14 period didn't change a thing on that. And then the order flow volume, again, it's pretty standard. I have tick levels set for 2. So each histogram bar, and I'll go into detail on what this histogram bars mean, but they're covering 2 different prices, 2 different ticks worth of prices. Okay. So volume numbers, you could add the volume numbers in the bars themselves. I think, let me just see if I remember how to do this. You just scroll all the way down here to the bottom. Once you go ahead and open, you click on what's configured. You'll see all your options here on the right, and you scroll all the way down here, and you'll see show volume levels. It's in the font section under the label section. Show volume levels. Check that box. Who asked that question? Busy. I'm going to call you Busy. Check that box. You're good to go. Okay. All right. I'm going to hit OK. And let's get back to this right now. Now, clear. The other thing that I've kind of started looking at on the RSI is the middle number, right? RSI is between 0 and 100. and the middle number is 50, right? The textbook says, you know, over 70, it's overbought, under 30, it's oversold. But really where I think the magic is here is in the middle, in the 50, right at 50, right? That's exactly in the middle. We can't go lower than 100, higher than 100. We can't go lower than 0 when you're looking at the RSI. So that's the middle point. That's the part, this is where I want to see oscillation, right? We want to see crosses under, we want to see crosses over. And in my mind, it gives me, the more I use this, and again, I'm relatively new at the RSI, the more I use this, the more that this information is important to me. So I'm just going to go ahead and just, you know, past performance not indicative of future results, of course, because it doesn't always work this way. But I'm going to go ahead and put my crosshairs right at the cross, right? And sure enough, this would have been a good signal, right? You don't get the signal until the next bar, right? So it's a little bit lagging, it's a little bit delayed. But you know, if you would have said, hey, we're crossing under at the 50 now, maybe the market's going to break down a little bit, and it did. Let's go to the next cross. Hey, the market's crossing over from under to over the 50 line. Hey, look at that. That's a pretty good signal. So that's not enough information in and among itself for me to say, oh, I'm going long, I'm going short. But it's another piece of information that helps me with the puzzle of what's going on. And then again, moving average cross here, you know, the fast moved over really kind of after the RSI kind of crossed over the 50. And so that was kind of a confirmation signal, right? Well, we had another piece of information saying, yeah, maybe it is time to go long in this market. Maybe the market will go up. So those are two really good tools. And again, whatever oscillator you're using, it doesn't have to be RSI. It could be CCI. It could be the Awesome Oscillator by Bill Williams. It could be, you know, anything you're interested in. Just be good at it and try to kind of look at different levels and try to figure out not only overbought and oversold, but when you cross that 0 line, in this case, it's a 50, how quick it goes. That's really up. Chris says greater than 50 is power up. Well, I mean, it was today, that's for sure. So I want to just make sure I have I'm going to just go ahead to my chart trader. I'm going to turn that on. I'm going to have it hidden so I could just right click on my mouse to place a trade if I want. Volume profile is kind of, it's almost like I don't know. It's almost like a I don't know what it is. It's not, this isn't a typical Gaussian shape distribution so far today. We've had, you know, some significant highs and lows. And as a result, it looks a little funky. That's a technical term, funky. But a lot of volumes happening right now, right here. Point of control is way up high right now, right where this gold histogram bar is. And all the point of control is the histogram bar with the most volume. Remember, I started my volume from last night at 5 o'clock, and I'm running it all night, all morning, and all day. And when you log into Ninja, you could go ahead and set it to how you want. But I want to see the whole field. I want to see what happened last night. And you could zoom in and just do a few bars if you wanted just to do the volume profile on a few bars. So let me show you how to do that. You're just going to right click, and you're going to go to Drawing Tools with the Order Flow package, and you're going to click on Order Flow Volume, and just select the bars that you're interested in. And click, and then you'll get like a mini profile, right? You can get okay, this is the volume profile from this time frame that Jim just selected. And does it give us information? Yeah, maybe not. But you could do that. So that's a super cool feature of the software that we don't have on a lot of other software packages, to be quite honest with you. I know I'm a little bit biased, but this is pretty cool. So I'm going to remove that for now. Just again, right click, things happen. Remember that, right click, things happen. We're going to make that our trademark, maybe a logo, motto. All right. So what else do I have to show? You know, we have the value area is way north here. You know, not surprising. This whole dark blue area here is called the value area. This is one standard deviation worth of volume, if you think of it that way. And it's kind of important to traders, you know, in a classic type of environment, in a regular Gaussian shape distribution, it's, you know, if folks want to sell at the top of the value area and buy at the bottom of the value area. It's kind of a traditional way to look at it, with the expectation that the point of control is going to act like a magnet of some sort. Sorry, I missed that question. So in any event, the point of control is way up high right now. And, you know, I'm not a fan of the counter trend trade. Remember, my bias is bullish right now. And, you know, a lot of folks look at this formation and say, it can't go any higher. Market can't go any higher. So I'm going to sell right now. And, you might be right, or you might not be right, but, it could go higher and it could go lower. So keep that in mind, no matter how either gnarly or how positive a chart looks. In my experience, in my opinion, it could go higher and it could go lower. So that's not a technical analysis technique in my mind, right? I want to see areas of support. I want to see areas of resistance. And, we have 3 candles here that tried to get higher that couldn't. And let me just kind of make a rectangle here to kind of highlight where I would say this is area of resistance. So I'm just going to put it up here and I'm going to make it, I don't know, about 8 ticks high, give or take, and say, all right, so, we peaked into this area of resistance once, we peaked in twice, we touched it the 3rd time. Is that enough to say, hey, this is a real long-term area of resistance or not? I don't know. Me personally, I'd like to see another bar, and we're going to see another one in a second. And before we make that judgment. So the more touch points we have, more confirmation that there's an area of resistance, in my mind, it will help with the notion that, yeah, maybe we could do a counter trend trade right now. Maybe we could sell one right now. That's just kind of how I'm thinking, and we'll try one in a little while. But that's kind of how I look at it right now. So that's that. On the downside, I don't really see an area where I could draw a rectangle right now and say, okay, this is clearly an area of support, because nothing's really been tested, right? At 7 o'clock, 6:50, 7 o'clock bar, we didn't really spend a lot of time down here. We just kind of marched right back up. And so that's kind of what I'm thinking right now. So now we have a new candle. Every 10 minutes a new candle forms. And the 9:30 candle will probably be more important than the 9:20 candle in my analysis. But let's take a look at what happens here. Chris says, is 68%. Yeah, so that's right. Chris is referring to the value area where I suggested this is 1 standard deviation worth of volume. And yeah, that's 68% of the volume. It's probably 68.1 or something like that. But you could actually change your settings and say, hey, I want the value area to be 75% or 50%, whatever number you would come up with. But the classic interpretation is 1 standard deviation. So I'm going to keep it like that. Some things aren't worth messing with in life, and in my opinion, that's one of them. That is definitely one of them. The second thing is, don't try to take food away from a dog who's eating. I've learned that the hard way. Anyway, new candles forming. Which is good. Let's see how it goes. But I mean, we have a lot of higher lows here, right? So the other thing I like to look at on the candles is, we got higher low, higher low, higher low, higher low, higher low, higher low, higher low. That's very bullish, right? We finally have a candle that's kind of broken out of that pattern, but that's just one candle. Let's get some more data. And again, I'm looking for a trade opportunity or trade idea that could last anywhere from 5 minutes to an hour, right? If you're in here trading on a shorter time frame and you want to be in and out quicker, then you're already doing that, and that's something different. That's not what I'm looking for. I want to get 1 or 2 good trades in a day, and I want to kind of be patient. I want to give myself some breath, and patience is the hard thing, right? It's you don't want to miss something. You get anxious and nervous, and everything. A lot of things are going on in your head that makes you want to change your mind and do things you shouldn't do. So in any event, let's see kind of how this candle goes. I'm going to add a Fibonacci retracement line right now, because I think we have a really good area to do it. We have a low here at around the 650 bar, and then we have a high up here. And, so a fib line might help us decide, hey, if we are going to go long, maybe we wait for a little bit of a retracement. Let's go ahead and add that. Really easy to do. Pencil tool, upper left. Pencil tool is kind of universal, drawing tools, and they've thrown Fibonacci into the drawing tool category, which at first never made sense to me, but I guess it does now. So I'm not gonna complain. So we're gonna click and click, high to low. Again, this is just areas of interest, and I'm not doing any. This is, if I miss it by a tick or two, that's okay, because I'm just looking for areas of interest, and a tick by tick analysis. Oops, sorry, is difficult to deal with. Let me turn that phone off. Sorry about that, guys. And let me just kind of drag this down and get a little bit better. I'm going to go ahead and edit this thing. I'm just going to right click again. Ninja, you just right click and things happen. I'm going to change my prices. I'm going to get rid of the 23.6%. Not my friend. 76.4, not my friend. I know whoever invented the Fibonacci sequence is like, what are you talking about? Not your friend. All right, so we have a long way to go before we get down to 61.8, right? Pretty, not really that long. It's 6 handles, but based on the velocity of the market, the volume of the market, the lack of economic news today, there's more stuff coming out tomorrow. I think the market's going to catch its breath a little bit today because of the whole what I would characterize as the COVID scare of the last few days, and kind of get its footing right now. So classically, what I would do here is I would look for retracement down back toward the 61.8%, and I'd kind of line it up with the volume profile a little better. And let me get my crosshairs out to show you what I mean. So I'm looking for areas of weakness, and there's not a big area of weakness right here because there was some volume there, but just look for the indentations, right? So my indentations, like, listen, this would be a good place. 33s would be a good place for me to try to get a unit as an example. So all I need to do is I'm just going to right click, since I already turned on the chart trader, and just right click, and I'm gonna send an order. This will be buy limit order, right? And the limit orders by definition are, hey, I want to, in this case it's a buy, right? So it's like, hey, I want to buy at this price or better. So I'm going to send this order, and if this were a live account, it would shoot over to the CME Group Globex exchange, and it would be resting in their order book, right? It would be resting in their order book. And if the market gets down to me, I have a chance of buying a contract at 43.33, right? And the idea here is I'm going to demonstrate some patience, and I'm going to wait for the market to come to me. And I'm going to use the 61.8 in the volume profile to say, hey, this will be a reasonable place for the price of this market to retrace back to. Now, if you're more aggressive and you want to get a unit in quicker than that, let's see if we have any ideas. I mean, we do have some ideas actually, and I'm going to just duplicate this. Just right click, and I am going to copy that, and I'm going to right click again, and nope, I messed that up. Sorry about that. I'm going to go to rectangle, and I'm going to draw a new one. And what I'm going to do is pick off the bottom of this particular candle, the last 4 candles, draw a rectangle, and say, aha, here's kind of maybe a short-term area of what I would consider support. And it's very short-term, right? I mean, literally, I'm looking at, from 8:50 to 9 o'clock on forward here, 30 minutes worth of prices and data. And I'm going to say, all right, so is it reasonable for the market to peek its head in that area? Sure, it is. Is it reasonable for it to maybe close down there? Well, wouldn't be bad either, but that would be a more aggressive trade entry, more aggressive order entry. And since we're trading micros, I could scale in really easily. So I'm going to just go ahead and let's take a look at the volume profile really quick, just to see where we're at in respect to that area that I just drew. And again, I am going to, right there, right at 40, around 36 would be something a little bit more aggressive. And again, I'm trading micros. So when I say a little bit more aggressive, it's relative to your account size and to maybe you're trading the bigger ones. So let's go ahead and just, again, we're going to do the right click. We're going to do the right click, and we're going to go ahead and send another order. Super easy. So this would be the second unit, right? And remember, in futures trading, this is just straight math, right? So if we were to acquire the first unit at 36.25 and acquire the second unit at 33 even, then we would just double up everything, right? We're doubling up P&L, we're doubling up tick values, and all that stuff. It's just really straight, I guess, would be additive math, or maybe more, I don't know. I can't remember. Anyway, so that's what I'm thinking right now. And again, I'm not interested in the counter trend trade yet. I do want to see I would love to see this candle or the next candle trade into my rectangle and fail. That would give me more confirmation. I'd feel better about the idea of maybe trying to go short up here. And remember, in futures trading, you can go short whenever you want. You don't have to, there's no uptick rule, right? It's just, if you want to sell something, go ahead and do it. You don't have that extra restriction you have in other types of trading. All right, any questions, any thoughts at this point? Type them in, and we can go over that. as well. And you could see, you know, my orders are mimicked on the trading dome, right? So you could see here's my limit order at 36 and a quarter, and here's my limit order at 36 and a quarter. So these two things are, you know, they're in sync, they're fungible. A cancel here, it cancels there, cancel there, it cancels here, which is super handy, I think, when you're going, you know, depending on how you want to actually trade. Okay, so let's see. Okay, so right, great. All right, so there's some great questions coming in. Chris says might be diverging of highs versus RSI, possibly. So I think what he's referring to is, oops, let me get my crosshairs back out. You know, the RSI now is it's hit at 70, is kind of curling back down. And you know, I'm not bearish here until, you know, I shouldn't say that, but if we get to 50 and start crossing under, I'm going to look at that as a signal to for further price depreciation. I guess I'll put it that way, further price depreciation. So, you know, pretty close to getting our first unit. You know, I'm feeling pretty comfortable from a stop point of view. In my mind, this question was asked also, you know, where would you put your stop? From a stop point of view, it's very clear to me where the area I'm interested in right now. It's going to be below the 38.2, and it's going to be below the value area. Not a lot, but a little bit. And I know I'm giving myself a, you know, pretty big area of risk here, right? But just right away, until I get my second unit, until we have a little bit more time under our belt, I'm feeling this might be a reasonable place to put it. So I'm going to go ahead and just kind of drag, I don't know, maybe 8 ticks below, maybe 6 ticks below, something like that. And I'm going to go right click. And then in this case, it's going to be a stop, right? I'm going to do a stop market. I'm going to send it, and it's color coded differently. And, you know, one of the things that I have to change, of course, is that one contract is going to have to be a 2, right? Because for the market, if we get down to my stop level, I'm going to pick up a second unit. So I will be long 2, right? So now I'm protected. Market goes ahead and just crashes for whatever reason. You know, somebody else decides to close their borders because of COVID or something like that. And we do have, you know, velocity on the downside. I have a catastrophic stop in, right? I have that in right now. So that's best practices. And I don't have a profit target in yet, but this is best practices. And as this trade matures, and as we have more price information, then we could do stuff like tightening the stop, adding profit targets, and all those kind of things. And of course, you could do this all at the same time if you want, using the ATM strategies on Ninja, and having those orders related on a OCO level, you know, order cancels other. You could certainly do that, but I'm kind of doing this manually here to show everybody how nimble the chart trading could be, and the dome trading can be. Let's see. Mike says, I'm sorry. Let's go back up a little higher, Mike. How do you get the daily time frame? If you want to change time frames, on the upper left hand corner here, just select that. You know, right now, upper left hand corner on the chart, you see 10-minute. If you want to change it, you're just going to click on that drop down here, and you could pick any of these, or you could even configure a customized setting. So feel free to just do that, right? And if you want to just toggle back and forth. Alternatively, if you want, this little control panel at the top here is kind of powerful. This thing, it doesn't look like much, but it actually has, it does a lot of stuff, right? You know, it shows your orders, it shows your executions, you know, it shows your positions, it shows your accounts. That's kind of number one on these tabs down here. But if you want to launch anything new, there's this new button up here, and you could just launch it. You could just launch a new chart. You could just select the market you want, right? So let's just go MES, and then you could make it a day chart. Oops, I'm sorry. You could make it a daily chart. You could make it a weekly, whatever you want, and then just simply hit OK. And it's going to open up a new window with that chart on it, right? And all your trades are going to show up kind of clustered on here, and you can kind of get rid of that pretty easily with one of these. Hang on a second. I'm going to right click data series, and then scroll down at the very bottom of data series. And then you could just go ahead, and if you don't want those text markers there, just say do not plot. Or you could just change it to markers only. But I'm going to go ahead and change it to do not plot, hit apply, and OK. Now I've got a clean chart. So it's really that easy. You could launch as many of these as you want, have different markets up, and depending on whatever your analysis technique is, go ahead and do that. So you could toggle on a chart, or you could open a new one. Hopefully that helped. Okay, so Mike says, what symbol can I use to see what direction it is moving? Which I'm not sure I understand the question, Mike. Which market are you interested in? So if you're interested in the NQs or what would be the QQQs in the equity world, you're just going to simply, there's an MNQ. So the symbol is NQ, right? And the front month is 9 and the year is 21. So MNQ is the micro. And if you wanted to look at the bigger size contract, you would just do NQ. That would be your symbol. Okay, so P&L you could see up here. Actually, we're about to get our second unit here, which is exciting. But right now on positions, it'll show my open P&L right there. It's kind of showing it right there. In the accounts, it'll show my unrealized P&L and my realized P&L. And the difference between realized and unrealized is simply, trades that I've closed will be in the realized P&L, and trades that are still open would be in the unrealized P&L. So again, this little box up here, it doesn't look like much, but it's pretty powerful, in my humble opinion. It does a lot of stuff. So, if you are, and I'll go ahead and put a link in here in a second. If you want it, at the end, I'll put a link in about, trying the software out for free, 14-day free trial. If you haven't already, feel free to do it. If you have already, and you want to keep simming and you want to keep practicing, we'll fund an account for $400 and you could do that forever. So, but again, there's a point when maybe you want to get off a sim and go live, and the micros are a really good market to do that, in my humble opinion. All right, let's take a look at what's happening now, though. We didn't get our second unit, which it's still early, right? It's the 930 bark is being developed right now. It's 935 right now. We're right smack dab in my area of what I characterized as support. We have closed in that area of support. Right. So now things have shifted downward. Right. So now I'm going to, since we did close in there, I'm going to shift this down a little bit and kind of look at it in relationship to my other unit. My second unit is here. I like that. I think we're in good shape. We do have a lower low, a lower low, a lower low, and a lower high, a lower high, a lower high. That's a little bit on the bear side. But, on the RSI, we're still kind of holding our own. We're kind of slowing our roll here a little bit. We're not breaking 50. There's no records there's no velocity records on the RSI right now. So this is a good thing. This is a good thing for our position. So I feel pretty good about it. All right. I think I caught up on all the questions right now. It's 9:36. So probably one more candle worth of data, and I'm going to start doing things like changing my stop loss, adding profit targets, and stuff like that. But let's get another piece of information into in the form of a candle and see if we end up with, we probably will end up with a lower high, is my guess, because that for it to go higher than the previous candle high would take some work, especially right now with kind of a lower volume, lower volatility trading that's going on. Moving average cross. It's diverging. I mean, it's diverging still, which is also a positive sign for our trade idea, right? We want the fast to move upward faster than the slow blue moving average moves upward, right? That's what we want. If it starts converging or turning around the other way, that's not great for our position. Again, don't feel shy to type in some questions, and let's take a look at the RSI a little bit more and see if there's any kind of trend. One of the things that is very popular that folks do with indicators like the RSI is draw trend lines on the indicator itself, right? I know it sounds kind of weird. It's like, what? So, but it's easy to do. I'm just going to go ahead and let's just draw one. I'm going to just pick a low and I'm going to kind of draw a trend line like I would on a chart. And lo and behold, we've kind of crossed under that trend line, right? And so that's another good piece of information when you're looking at this particular market. And again, this line, oftentimes when you have a support line like this, it sometimes becomes resistance, right? But this line is so steep right now, I don't see that being the case because it's too steep for that to happen right now. But you could do stuff like draw triangles and all sorts of things on the actual RSI itself, and it might give you an idea of trend and momentum and stuff like that. So that's a common technique that folks do with the RSI. I'm really keen on the 50 line though at this point, and I'm going to start looking at that early in the morning, between 7 and 7:30. Because a lot of times we have some price action, like we did today here. I guess it was, perfect. Turnaround. We had some turnaround velocity up here, which was pretty cool, pretty neat. Micro Bitcoin. Yeah, I mean, it's, I don't know if I have it in my demo account. Let me try. The micro Bitcoin, I think is, let's just type in Bitcoin, see what I get. I got Bitcoin, and then MBT would be here. Let's double click on that. And that would be the micro Bitcoin market. So MBT is the symbol. And if you just type it into the box in there, it's just one of many ways you can open up data on the NinjaTrader charts. It's easy to do. So, and again, micro crude is brand new. Now that one I do not know if I have on my system here. I have it on here, but I'm not sure if we're going to get data. Let's try it. Let's see what happens here. Yeah, I think we need next week before we're going to get data on there. So sorry about that. Let's go back to the main event and see what's happening here. Another bar is formed, and as promised, we're going to do some some order moves here. So we're about 3 handles into the trade on the upside, right? So I want to see a peek back into the area that I've identified up here to take one of the units off, and I'm going to go ahead and move my stop a little bit. So we're going to go ahead and do a right at the base there. Maybe just pull it up a little bit. Be a little bit more patient. We're with micros right now, so I want to see a peek back into my rectangle right here, and then from a stop point of view, I'm just going to move it up to be right below this particular, right where our entry is, right below this rectangle here, which I'm considering support. So I'm going to go ahead and move that up right now. And then this particular, I think the 2-unit trade is, since I did that, is kind of off the table. So we're going to go ahead and just cancel that one. And then I'm going to change this to a 1 lot. And then now we just have 1-unit trade going on right now. So so if this were not a micro, then maybe I would consider being less aggressive on the exit. But since this is a micro trade, I have a lot more ability to be patient. I'm not overly stressed. I don't have a lot of anxiety. And maybe if it was a 2, 3, 4, 5 micros, it would have been a nicer trade, but it wasn't. And we want to come up with areas where we think we could be successful with respect to support and resistance. And let's just see what happens here, because I don't know. I do not know. Mark says, do you tend to trade one symbol at a time? Well, here's what I think, and this is my opinion completely. My opinion is this is very hard to do. Trading futures and being successful over a long period of time, especially if you're new, is hard to do. So what I suggest is, become an expert at 1 or 2 markets, become an expert at 1 or 2 time frames, right? The behavior of the market's different, post-open than it is pre-close, than it is pre-open. So there's different time frames when the market's going to behave a little bit differently than ordinary. So pick a couple to get good at, pick a couple time frames to get good at, and then come up with a technical analysis technique. Again, I'm an oscillator, I'm volume profile, fib line, and that's it. You don't get overly complicated. Again, this is my advice based on my opinion. That's what I think. So Thanks for that question. That's a really good one. You know, the paradigm of these markets are different, right? There's different supply and demand drivers. There's different reasons why things move. There's different markets are hedged commercially and institutionally for different reasons. There's seasonality aspects sometimes to some of these markets, in my opinion. So they're all a little different. And to apply one set of thinking on soybeans versus treasury bonds versus currency futures, I think is tough. I think that's tough to do. Although the chart, the candles tell the story, right? But after the candle, what is the story? I don't know. Chris asks, QM is a half-size currency. So there's three different crude oil, right? There's the regular one, CL. The QM, I think, is like a half-sized, 50% of the size of the big one, and then there's the MCL, which are the micros. So that's the difference. There's three different sizes, basically, of the same market. WTI, West Texas Intermediary crude, light sweet crude, a little bit less sulfur in it, delivered at Cushing, Oklahoma, standardized contract, standardized delivery, standardized everything. So it's a really good market. It's a global benchmark. I mean, people from all over the world trade it. Energy traders will trade spreads versus the Dubai crude oil and the Brent crude oil, and there's all sorts of different things you could do with that. But if you're literally just trading from the way we're trading right here, we're day trading. We're trying to buy low, sell high, buy low. All those three markets are valid markets. So Busby asks, how do you split your screen to show two time frames in one market? Well, what I do, I like to see two independent. I think this is your question, but I like to see two independent. So I'm just going to right click up here and duplicate this window. And I'm going to move it over, and then I'll change it to, I don't know, we'll change it to a 30-minute time frame. And so now I've got two side by side, and I could kind of position them. I do have a multiple monitor setup right now, but because I'm doing this, I'm running the broadcast software on the other machine. I'm going to clump these two things together. So, and then again, it's really easy to manipulate the workspace to make it so you can see it how you want it. So that's how I would do it. Again, just right click, duplicate, right click in the bar up here, duplicate, change your time frame. That quick. I did it in what, 5 seconds? And I'm just going to close it. Hopefully that answers your question. Superdome is great. Who asked this question? Mark says, do you use the Superdome at all? If so, what are you looking for? So right now I just have the dynamic dome up, and there's a little difference between the two, not a lot. But I like the chart. I'm a chart guy. That's kind of how I roll. But if you're a dome guy, they're both very powerful, very good to use, and I like them a lot. And I don't know, I've used probably every single software that ever existed. So this is my favorite now. Let's take a look at what's going on with our trade idea. It is, we're going to be out of here about 9:55 today. So we're going to see one more candle. And then we're going to call it a day. So stretch this out a little bit. So now we have, we're challenging this high right now, which is a good thing, right? We've kind of broke down a little bit into and we got one of our 2 units. We didn't get the second unit. We're up about 3 handles right now. Couple trade strategies here. You could literally decide, hey, I would like to just book my profit right now. This trade's taking too long, right? This isn't in, I decided I wanted this to happen in 30 minutes before I placed the trade, right? I made these decisions before I placed the trade. And that's a perfectly valid thing. There's nothing wrong with booking profits. Remember, my time frame's an hour, so my time frame's a little bit longer. And so I'm gonna hold tight. Now the other thing you could do is you could move your stop to break even, and you could say, you know what, I'm gonna let this thing run. So I'm gonna move my stop to break even. Right here where my I don't know what you call this area on the chart. It kind of highlights where my position's from, and it shows me, you know, I'm long, it's green, it's positive, we're going up. You know, we're up three handles right now, or 3 points. So it's not unreasonable for some traders to say, listen, I'm going to move my stop up to break even. Therefore, I can't possibly have a losing trade. I just break even plus a tick, so you get your commission back, and then you're good. Chris says entry. What's the question again? Chris, restate the question. I'm kind of lost in this in the chat box. There's like a bunch of stuff scrolling down. Yeah, my line, right? That's what that is. Thank you. Chris is co-presenter of the day. Appreciate that. My entry line. So that's another strategy. Tighten it up, get out, keep it. Got a longer term horizon, or move your stop to break even. Those are your 3 options, right now. So in my world, I'm a little bit, I would suggest that you would probably do that sooner than later. We're going to get one more candle right now. It looks like there are sellers coming back in here, pushing this thing back down. But let's just see what happens with this particular. This is a very small candle so far. High to low is only a little bit over 2. So I'm going to say 9 ticks, right? 9 ticks. In one more minute, we'll get another bar, and we could make a decision. And it also gets to the point where, well, you know what? If I move my stop to break even based on the volume profile, I'll probably get stopped out. So maybe I don't want to do that. Maybe I just want to take this trade off the table. And I'll show you a quick and easy way to do it. If you're like, and this is actually a good strategy if in panic mode. There's a close button on the dome. You just click that close button. It'll flatten your position and get rid of all your working orders. So that's how that would be. No, Mark, I don't. I think that's, in my opinion, I don't think that's a good way to go. When folks say, "Hey, I'm gonna risk 1% on this trade to try to make 2%," I think that's just a random number. They're random numbers. I think you got to look at supply and demand. You got to look at the candles. You got to decide where areas of support and resistance are. And it's very rare that lines up exactly with your 2% rule or your 1% rule or your 0.5% rule. That, again, that's just my experience. So when folks say, "Oh, Jim, your risk reward ratio is out of place here," you're risking more than you're trying to make. I'm just reacting to the candle. That's all I'm doing. So, all right. So real quickly here, I'm going to go ahead and put some stuff in into the chat box for us to take a peek at. I'm going to go ahead and close. I'll just let it run. I'm going to close it out. I'm just going to hit the close button. We're done for the day because my time is up. And I was like, I wanted to get something done before 10, and we did that. So awesome. Let me just type in some stuff here for you could be helpful. And remember, trading futures, options, and futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of, leverage and volatility. It's a real thing, so be careful with that. On a real-time practice account today, and just keep that in mind going forward. And reach out to me directly. Here's my phone number. I'm going to actually give you my direct phone number. I have like another Zoom thing at 10. It'll go like an hour. So wait for after that. But feel free to call me this afternoon or tomorrow or whenever. Sheldon, thank you for being here. Email address, if it's more convenient for you, I'm going to go ahead and cut and paste that in here. Feel free to send me a note, and I will try to get back to you as soon as I can. It's jim.cagnina at NinjaTrader. And demo accounts. For those of you who haven't done this yet, here's a link for a practice account. And finally, good thing we got out because I think we would have got stopped. Finally, if you're ready to open a live account, up a live account, so if you wanted to, for instance, if you wanted to, all right, so I'm going to answer this one last questions. Oh, they're in the chat box. Sorry about that. You can't see those. I'm just going to move this over to here for folks to see it. You could place limit orders to get out. You could just tighten up your stop to get out. Either way, whatever way you want to go. So And pretty much, if you want a demo account, just go to NinjaTrader.com. That's the homepage. And then you'll see, open account button, get started live. It's very easy to figure out how to do either of those two things. I just cut and paste this link here. It doesn't matter which one you use. And then email address, jim.cagnina@ninjatrader.com, and then a phone number there. And I'll leave that up on the screen for a second. Thanks everybody for coming. I greatly appreciate it. I hope to see you next time. I'm going to keep doing these things as long as I wake up every morning. I'm going to keep doing them. So keep that in mind. Feel free to reach out to me at any time. All right, everybody. I just do want to remind everybody, take care out there and be good to each other.